It was also a big day for the IPO market after Klarna made its NYSE debut today, opening at $52 a share. It closed at 45 and change, but still higher than what those shares were originally priced. And other companies getting ready to follow. Tomorrow, we're expecting debuts from stablecoin issuer Figure Technologies, and on Friday, we'll get legends Gemini, BlackRock, Coffee Bar, and Via Transportation. Joining us now is Brianne Lynch, head of market insight at EquityZen's, an online platform where you can invest in pre-IPO companies. Brianne, welcome. So we've been waiting for quite a while for the market to seem hospitable to software companies. Even though we were at record levels, companies were hesitant to go. It just didn't seem like it was worth it. What changed?
That's exactly right. I think what we've seen is the IPOs that happened earlier in the year really set the tone for others to follow and showed that there is investor interest. And there's certainly interest in these fast-growing, innovative technology companies that have been private for 10, 15, 20 years, where the average investor just hasn't had access. So that's pent-up demand has been really fueling successful IPOs for some of these companies.
And how much of a role is the retail investor playing? The mindset where retail has been buying these dips, has really believed in this market, despite the numerous scares we've seen throughout the year.
We certainly saw that with both Figma and Circle's IPO, where that roadshow really didn't do a great job at encapsulating what retail demand was like for those stocks. You could see them trading up 100, 200%. Klarna, as a counter position to that, really is a stock that traded more in line with where it was expected to trade based on where it was priced. So you could see that 15%, closing above where it originally priced as a sign of really factoring in that retail demand. Certainly what we're seeing both in the public and the private markets is that retail investors are more interested in investing in innovative tech companies than ever before, and that's really changing the market.
How are you seeing these stocks perform after that initial pop, though? I mean, we saw Figma really lose a lot of steam after a huge run upward. I know companies don't love to see that kind of swing one way or the other, but is this behavior of the stocks themselves once they're in the public markets normal, or is there something different about how they're trading now?
Some of these stocks that have seen huge pops are going to naturally kind of normalize and come back down to earth. And I think it's an important reminder that the IPO is day one. You had the CEO of Klarna talking about this earlier. It's like the wedding day. It's the big celebration. But there's a long road of marriage of being a public company that lays ahead. So you can't really judge performance or future potential based on that first day. There's a lot of milestones these companies will continue to hit. So while there's been a lot of exuberance, I think investors need to be wise to look longer term and invest, based on what they see the long-term growth potential to be.
How do the floats look, the percentage of the company that's actually publicly trading? How is that influencing, you think, the amount of volatility that we see in these stocks?
Yeah, historically, or this year really, we've seen that there's been a tighter float on these, maybe hoping to dampen some of that volatility. So that's certainly a factor at play. And you also have to realize, these companies aren't necessarily going public because they're looking to raise a ton of capital. In the case of Klarna, actually 80% of the IPO proceeds went to selling shareholders. So early investors, early employees who may have sold in the private markets, but really didn't have that wide-scale liquidity event until the IPO. So that's the bigger driver, where Klarna as a company, they raised $200 million, but that's not really the big reason why they chose to go public. The capital market access was not the driver.